Welcome, everyone. Welcome to the Daily Scan for December the 3rd, Tuesday, brought to you by BreakpointTrading.net. Today, because it's Tuesday, we are doing Technical Tuesday, and we're going to talk about a technical indicator today, one that actually I'm very near and dear to my heart, and I'll explain why in a minute. But before I get into that, the Black Friday sale is still going on. It will go until midnight tonight Eastern time. So those on the West Coast will have 3 extra hours. Actually, no, that's 8 o'clock. Sorry, 8 o'clock your time, midnight Eastern time. So we'll end today. Thank you for everyone that took advantage of this and signed up. I really appreciate it. Those who are members, annual subscribers, I do a Zoom meeting, and I will do one this month on the 15th. That's a Sunday, December the 15th. It's open to all annual and monthly subscribers. And it basically is just an open forum. They usually last 2 to 3 hours, something like that. I start off by explaining some of the new things on the website, answering any questions, and then we just open up the conversation to whatever anybody wants to talk about. Could be an indicator, could be technical analysis, it could be a particular stock. We'll talk about anything. So if you're interested and you are a subscriber, then you will get an invitation to that, and anyone can join. You don't have to participate, of course. You can just listen. There usually are a few folks that ask lots of questions, so I'm sure your questions will be answered even if you don't participate. Just to do the disclaimer real quick, I am not a financial advisor. I am not giving advice on what to buy or sell or when to buy or sell it. Each person has to determine your own risk profile and trading style. This is for educational purposes only. And if you do decide to engage with a financial advisor, or you already have one, you might want to go to this site right here and just validate that they are accredited financial advisor. But I am not one, so anything that I say today is not meant to be advice of to buy a stock. So let's go to the home page real quick and see what the market did before I get into Technical Tuesday. You can see over here, the market bias is still fairly flat. Not too much change today. It went up very slightly, not very much. We'll look at each of the charts real quick. NASDAQ went up today and actually broke out, so it is now at a new all-time high. The S&P kind of went sideways. Didn't really move too much today. You can see it right over here. Let me turn on my cursor right there. Went sideways. The Dow pulled back. So if you'll notice the shape of this pullback, it is a curved, like it's rolling over. I mean, that's the best way to describe it. Rolling over right there. Sort of did this here, and you can see what happened. Right here is a really good example of a market rolling over. Stocks roll over like this too. Rolling over and then heading down. So that's what the Dow is doing right now. The other two still look okay, although the S&P might be beginning that process. But we'll take a look at small caps in a minute. Bitcoin, of course, want to make sure we cover this one each night for those who are interested in crypto. Bitcoin also is kind of rolling over right there as well, although it went down and then pulled back, came back up to the highs of the day. So that's positive, but it's still hasn't broken 100 yet. So it's at 95.9, almost at 96. Has not yet broken 100. So we'll see. I talked about this on Sunday with Zuber on his channel. And the first couple of weeks in December is often choppy. So we might be seeing a pullback here this week. The market's overbought. So it would actually be normal for the market to pull back a little bit. We'll see what happens. So Bitcoin is kind of following along with that. The dollar started to move higher yesterday, and right when I hit the 21-day moving average. So pull back, reversion to the mean, and then starting to head higher again. can see gold kind of going sideways, bonds. The red one started pulling back again today. The dollar going sideways, and the 10-year yield sitting right there at 4.2%. And like I mentioned, I think it's going to move in a sideways pattern in between 4 and 4.5 right through this area. And right now it's right on the 50-day moving average. So didn't do too much, went up slightly, but not by very much today. Interestingly, we go back to the market bias matrix. This is something I noticed when I was doing this today. On the inversion, 10 to inversion, it actually pulled back. Yesterday, it pulled back below zero and closed just above zero. Today, it pulled back below zero again and closed above zero. Did that over here as well. It's actually done this 4 times in the last week or so. And it did it once back here as well. So it's flirting with inverting again. It's very, very close. So you can see right here, 0.04 plus, it's a positive, so it's above zero, but flirting with inverting again. We'll see. We'll keep an eye on that, see what happens. Take a look real quick at the dashboard. You can see the Dow was down, S&P was up slightly, very slightly. NASDAQ was up a little bit. Small caps down, mid caps down. They're pretty much like the Russell 2000, S&P 100. So large caps are the ones that are leading the market right now. NASDAQ 100 also. The VIX pulled back again a little bit. So VIX is very, very tame right now. The top 2 sectors for the day are both our aggressive sectors. So there's communication services where the internet stocks are. Had a nice day today. Here's technology, moved up, didn't break out. Energy came back, but actually didn't really do much today, but near the top. So everything else is negative. Those are the only 2 positive ones for the day. The bottom is utilities and financials. Real estate pulled back a little bit higher, but the defensive sectors are still near the bottom. So you can see the industry groups, fixed line telecom right there, mining is coming up, gold mining is coming up. So those are starting to recover. Media, it's XLC is the communication services. There's 1, 2, 3 of those. XLY is discretionary. So broadline retailers like Amazon, and industrials was in the top 10, and computer hardware was in the top 10. So, and then in our top 10 list over here, CRDO, Credo. This is one that I talked about. One of the subscribers asked me about it last week, and we covered it. Upstart was actually on our list, but we didn't buy it, but it was on the list. Palantir had a nice day today as well. So all of these have been in the top 10. If we look at this one, you'll see right there, nice gap up. It had earnings today, nice gap up. I think I recommended to put the move the stop a little higher, but did great with earnings. You never know about earnings. 12/2 was actually yesterday. It's binary, so good earnings will send it higher, but bad earnings will just as easily send it lower. And today it went quite a bit higher, up 48% on the day. So person that was holding that, I hope you're still in it. I think you got in right back here when I crossed over the 21. So there's a very nice, almost a double actually in about 2 weeks. So that one was one of our top 10 lists. Let's go back to here. And so that's it for that. Let's look at let's go here and look at IWM. So if you will remember, I think I actually have a chart, might have a chart on here. Let's see. No, I didn't. So if you remember yesterday, I said the way that I was playing it, this is small caps, and usually they do well after the first half of December, but the first couple of weeks can be choppy. So what I said was I would put actually I'll look at TNA, but it was right about there. put an order to buy if it goes up, and it didn't. It went down today, sitting right there at the gap support. So that's basically the range right there. So if it falls through that gap support, then that will be very negative, at least for the short term, for small caps. And if we look at this, say no, if we look at the TNA, which is 3x small caps, same thing. I said my buy order is still in, by the way, right here at 57, which is right there, 57, and the top of the gap is right there. So came down and just basically touched it. So 21 day is down here. So we'll have to see. So this is the benefit of setting a stop buy order higher than the price. It has to prove that it's going to be moving higher. And today it didn't. Today it moved lower. So my order did not execute because it didn't go up. And if it continues to go lower, that order will not execute. And I probably will just cancel it. And then what I will do is just watch the chart and see if some of these indicators start to roll back higher. And we'll look at some of the other ones like this here. Probably will come back to the 21 day. The 1 year chart. So right there is the gap support. So 21 days down here at roughly be about 52, somewhere around there. But I'll keep an eye on this. In the first couple of weeks, this could continue lower before it heads into the end of the year. Now, just because historically the last 2 weeks are positive, it does not mean it's going to happen this year. There's a lot of other things at work in the market right now, not the least of which is the overbought condition of the overall market. Even, here's SPY, here's the S&P kind of going sideways. Here's the NASDAQ, broke out today to an all-time high, but not with great volume. So volume is still below average. So there's not really a lot of conviction in this breakout. So this could very easily everything could roll over, start to head down. We need to be careful about that. But right now, everything's bullish. So we'll continue to watch it and see what happens. All right. On our worksheet, one stopped out today, which is WGA. I actually moved stops up some more because everything is so overbought in the market. I'm not adding anything else. I added Google yesterday and moved the stop up a little bit on Google. But the one that stopped out is WGS. You can see right there, actually came down, just touched the 50-day and was stopped out. But all the indicators are moving down. So we'll see. We'll see what happens. Only 3 left in here. Kava, sitting right on the stop line. Gilead, which had been looking really good, pulled back significantly today. So stop is right on the 21-day moving average. Gilead will be a 1%. I moved that stop up to 91, so that'll be a 1% gain if that one stops out. And then Google sitting pretty well above the 50-day and sitting right on the 21, and it's a shooting star candle, which is usually a reversal. So that one might reverse too. Lots of things in the market are sort of looking like this right now. All right. So that's the status of our worksheet. And by the way, anyone that's interested, if you'd like to download the worksheet, if you're an annual subscriber, it's right on the portfolios page, that menu bar button, and paper trade worksheet is right down here on the lower left. Just real quick, we'll look at the status of the overall market. Right now, it's still very positive. So for those long-term traders, the up signal was way back here, October of last year. So more than a year would still be in. And for the shorter term, if you didn't make it into the beginning way back there, I put potential opportunities to jump in as it continues to go higher. But I wouldn't jump in when it's already up there because it could already be extended. But this would have been an opportunity. This would have been an opportunity. This would have been one right here. And I put these right on the chart. So all you have to do is come to the portfolios page and click on the daily view, and you'll be able to see that. All right, so that's where we are. Let me close some of these out and get to Technical Tuesday. And this is a very interesting one. A subscriber asked about this and said, could you explain the TTM Squeeze? All right, so I am going to close these and we are going to talk about this. First, before I jump into that, I want to show this little video that I saw, which I thought was pretty cool. And this is basically an analogy of why you should set stops. So if you watch this cup, just imagine this is your stock that you bought and it's been moving up, just like we've been working on the daily scan. And your stock is sitting right up here, or your portfolio, or whatever you want to think about it. But think of right there, that's where your stop is. So let's watch this. This is why you should have stops. That's your stock. Stock is starting to decline, starting to burn down. If you didn't have a stop, the whole cup would burn up and your stock would be gone. But if you have a stop, you still own it. So you're still in. So that's an analogy of why you should have a stop. Just wanted to show that. I thought that was pretty cool. I might put that on the website somewhere, or maybe in the newsletter even. All right, so let's go back to the TTM Squeeze. So the first thing that I want to talk about is the TTM Squeeze was created by John Carter, who I have a lot of respect for. And I would absolutely recommend that anybody that's interested go to the book section. You do not need a subscription for this. Anyone can go here. The books tab is open, whether or not you have a subscription. And I've separated this by, I've read pretty much all of these books. Technical analysis, if you want to learn that a little more, over here on the left. Market Wizards is in the middle. Different people. There's Darvis right here, how I made $2 million in the stock market in the 1950s, by the way. These are fascinating books to read. And then the one on the right is Psychology of the Market. But the one I want to point out is right here. This is John Carter's book, Mastering the Trade. You can just go to the website, click on that. You can order it directly from here. This kind of explains the whole thing. But I read this book a few years ago, and it was eye-opening about, how to use technical analysis, but more importantly, how he uses it. And he describes his squeeze, kind of stumbled across it, trial and error. He's the one in the book. He actually says there are 3 stages of a trader. Stage 1, lose all your money. And he did that. He lost all of his money about 3 weeks before his wedding and couldn't afford the honeymoon. Stage 2 is stop losing all your money. And then stage 3 is start making money. So you can go through, and he says it's about 2 years for each one of those stages, but that's if you don't have any help. If you have help, you can go through those much more quickly, and hopefully you don't even have to lose all your money. So great book. I highly recommend it. He actually explains his squeeze, and he explains the technical components of how he created it. I'm going to actually show you that. Let's actually use this Credo technology since we were looking at it before. So in my little buttons over here, I have one of these buttons I actually call the John Carter Squeeze. So when I read his book, I used all of the information that he had, and I created the indicators that he used. I used the same indicators. And this is what it looks like. So this is the squeeze. And the TTM stands for Trading the Markets. That was the name of his first company, Trading the Markets. That's what TTM stands for, and TTM Squeeze. His company now is called Simpler Trading. So he has a new one that you have to pay for. The TTM Squeeze is free. It's in a lot of different, I'll show it to you in stock charts, but lots of platforms actually have it. But now it's ST Squeeze, but you have to pay for that one. So that's Simpler Trading is now his company. So this is basically the way the squeeze works is he uses the Bollinger Bands, which gives you volatility, and he uses the Keltner channels, which I've talked about before. It's essentially the average true range of a stock. So in this case, the green one in here is the Keltner channel. It's the average range of this particular stock. And you can see this has been a very strong stock because it's gone up to the upper levels of the average true range. Now, what the squeeze does is it identifies when the Bollinger Bands, which are volatility, start to squeeze inside of the Keltner channel. And that's what you see in the bright green right here. So on my little button, if you see bright green, that equates to a TTM squeeze from John Carter. Now, he also, at the same time, used the ADX line, which basically tells you when, because the squeeze doesn't necessarily tell you whether it's going to go up or down. It just tells you that it's in a squeeze. It's like a spring getting ready to explode, but it could go either way. So he used the ADX lines down here to indicate which direction it probably would go. And if the green lines are on the top, then it's moving higher. If the red line is on the bottom, then it's moving lower, and vice versa. If red's on the top, then it's moving down. Actually, if red is on the top, it's moving lower. If green is on the top, it's moving higher. So that's the way to look at that. You can see that it hit a squeeze back here, but it didn't actually fire or start moving higher until the green one went above the red one down here. So that's when he knows he's getting ready to identify when it's going to fire, and then he will execute the trade right here. Now, he does mostly options. So he uses this for option trading. I use this on TTM. I'll show you a different way that I used it for TTM. STM, stock that I showed you before, and actually bought call options on that, but I'll show you that in a minute. So this is the John Carter TTM squeeze. Now, the way this looks and by the way, one thing that I learned when I went to his session, and incidentally, the end of this week, I am going to the Money Show in Sarasota Thursday and Friday. So I probably will not be able to do a daily scan on those 2 days. But John Carter is going to be there again, and I'm going to have a chance to talk to him again. So he said that he will basically stay in once a squeeze fires, and in this case, it fired right there, right when this green one went above the red one. He will stay, and this also went above the 5-day moving average too. So that's another reason it fired. He will stay in a trade for 8 to 10 bars. This is a daily chart, so that means 8 to 10 days. So let's count them. 1, 2, 3, 4, 5, 6, 7, 8. And this is earnings. So he might have got out here, but he probably held it. So there's 8. He said 8 to 10. So this is number 9. He probably would exit his call option trade on this day right here. Day number 9, maybe day number 10 to see what it would do, see if it follows through the next day. But that's what he said. So it fires there. Count 8 to 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And then he would exit his call option. Now, for those that are interested in learning more about John Carter, this is his company, Simpler Trading. This will explain everything, who he is, how he started trading. But an even better way to learn about him is to go to YouTube and just look up. The name of this is "This Free Indicator Changed My Life." He actually explains the TTM squeeze and how he uses it. And he actually shows some of the trades that he's done. This is back in 2014, back right after he first created this TTM squeeze. And by the way, he says he does not trade without it. He said 95% of his trades are because of the squeeze. He uses the Advanced Squeeze Pro now. I'm going to show you both of those in a second. But right here, profited over $1 million in about one day and another $500,000 the next day. TTM Squeeze allowed him to do that. Now, it takes a lot of cojones to trade the way that he does. When he has conviction on a trade, he will go all in. So he could lose big and he could gain big as well. But he has multiple $1 million trades that he'll talk about in this video. So I highly recommend you look this up on YouTube. This free indicator changed my life. Of course, at the end, he'll pitch his simpler trading and pitch getting the Squeeze Pro, which is the one you have to pay for. But this one is free. I'll show you what it looks like in stock charts. So stock charts, you need to have the advanced stock charts, ASP, advanced stock charts platform. And if you do use ASP, then here's the TTM squeeze right here. And the way this TTM squeeze works, now I showed you how it's put together. So remember the Bollinger Bands and the 1x ATR for the Keltner channel. And whenever it shows you that bright green right here, that is a squeeze. So what John did is he converted this into a very simple to read indicator. And the TTM squeeze is free. You can find it on most platforms. So right here, it's going along, it's green, it's green, it's green. It turns red. That would be the same thing as my bright green on the one that I showed you. That's where the Bollinger Band has gone inside of the Keltner channel. Now, I want to stress that this is not exactly the way his indicators work. He's added a lot more math to it, but it's essentially roughly how it works. And you can see the ADX lines down here. Now, again, the red ADX line was above the green, so that's not the time to get in, but at least the squeeze fired right there. You can see another squeeze fired back here, and now the green one is above. So this is for TSM. So you've got a squeeze right there, and I'll show you why I got in right over here in a minute. But this is what the TTM squeeze looks like. Now, let me show you what the Squeeze Pro looks like. And for that, I'm going to use my Thinkorswim platform. And John uses Thinkorswim all the time as well. This is TSM once again. So the indicator on the top up here is the TTM squeeze. You can see it right up here, TTM squeeze. The one below it is the Squeeze Pro. So the first thing you'll notice is that the TTM squeeze has green and red. Red means it's squeezed, whereas the one below it has black, red, and there also is a yellow indicator as well, which is not on this chart. But essentially what this does, you can see instead of green down here, it actually has blacks. What that means is he's relaxed the criteria for the indicator a little bit so that when it's red right here, it is in the squeeze. The yellow one would actually be even tighter, which means it's been squeezing even longer. The black one is saying it's getting ready to go into a squeeze. So it's a little bit looser on the indicator. And he basically takes what I showed you with the Bollinger Bands and the Keltner channel and turns it into math and then creates this indicator like this right here. Down below is the ADX line, just like he uses. So this basically is what John Carter uses. He uses other things too, but this is the primary one, the Squeeze Pro that he uses down here. If you want to get the Squeeze Pro, you can buy it and download it into your own platforms. It's available for lots of different platforms. As you can see, it's in Thinkorswim, and I use Schwab. Schwab is converting everything to Thinkorswim. It's also in TradeView. It's in It's in stock charts, the ACP version, advanced charting platform. But this is what it looks like. So I just wanted to show you both side by side. So you can see that the squeeze started to squeeze right through here, actually went into a squeeze here, and then relaxed and went out of the squeeze again, and then went back in right here on this red line. Now, I've added one thing to his indicator, and I'll explain this more when we do the RSI, which probably will be next Tuesday, when I explain the relative strength index. But I have added something down here to the ADX lines, which is basically the relative strength index. And you can see the criteria right here. So I use a 5 moving average for relative strength. 72 is overbought and 28 is oversold. Normally that's 70 and 30, but I want to catch it a little bit earlier. So when it crosses if it crosses the 28 line down here, it will give me a green arrow. So this is the reason that I found TSM. TSM gave me the signal right there. That's when I got into I bought call options right there. And you can see right now it's continuing to move up. So going back to John Carter's process, 8 to 10 bars, and he usually is out. So I'm going to watch this for 8 to 10 bars and see what happens. And I'll show you guys what it looks like too. Incidentally, on the left-hand side, I have a 10-minute chart, so I can see the same thing very close up. It has the Squeeze Pro in here, has a MACD down here as well, and I also put the VIX down below, so I can see what the VIX is doing on a 10-minute basis during the day as things are actually moving. This helps me with my entries, so I can get in. Just watching this, I can see whether it's pulling back during the day and starting to move higher, so it helps me get in. But that's what the TTM Squeeze is all about, which is free. The Squeeze Pro does cost something, and I don't remember what it was exactly. It's around $7.95, I think. But you buy it once and then you own it. It's right in your platform. So you can download it right to the platform. So that's the way I use it. If we go back to this chart right here, so here's TSM. You can see right here on this day right here, this gray line back here is my RSI, my relative strength indicator. And you'll notice down here, RSI 5, and I'm setting this right here for when it crosses. So it crossed right there. That's where I got the signal right there, and it's gone up 2 days so far. I actually have a button over here for the RSI. So it's one of the buttons on the website. If you are a annual subscriber, go to chart lists and scans, or a monthly subscriber, you can do this too. A lot of scans are in here. The buttons are right over here. So here's the RSI 5 button. So you can click on that and be able to get that one. But I also have a scan that will scan for an alert too, by the way. I have an alert set up that will identify when a particular stock has crossed over that line. And it sends me an alert, and that's what I got on TSM. I got an alert that says it hit so down here you can see the RSI crossed. This is oversold, so that's an extreme. It's coming out of an extreme, which normally means it's going to start going up. The same thing can happen on the opposite side. So it's overbought right here. And as it crosses down, it means it's going to have a pullback. Not much of a pullback, but it did. You see it happened over here too, just a couple of days before that big pullback started. So this can give you advance warning. Right here is where it started to go up. And you've got to look at the rest of your indicators as well. Don't just focus on one. As I always say, you have to look at all of everything. So in this case, the force indicator down here was crossing at the same time, and the bars on the histogram are starting to move higher. So, and now that the MACD is actually crossed, it's just about to go above zero, which it probably will do tomorrow. And this stock may continue to move up. So we'll see. That's the reason I got into that. Based on the scan right here, I probably will put that scan on the website um, down here under the daily scan, because it is one that I run daily. I'll put the RSI scan on here tomorrow. All right, so that's it. That's how the TSM Squeeze works. And the Squeeze Pro is a little enhanced version of that. But I just wanted to explain really what it means, where it came from. And I highly recommend you watch John Carr. You will be amazed if you watch this. You will just absolutely be amazed at the way that he trades and the kind of trades that he puts on. And he does it over and over again. 2014 was that trade that I just showed you in this video right here. 2014, $1 million. And he has multiple of those for the last 10 years over and over again. I think his biggest trade was with Google, I think it was, and he made 5 million or something in one day. So he's an amazing guy. Highly recommend you take a look at what he does, and you will probably admire him as much as I do. All right, so that's it for today. That's the Technical Tuesday. I hope everyone enjoyed it. Let me know if you have any questions on the squeeze, and if there's anything else you would like me to do on future Technical Tuesdays. Next week, I think I'm going to do the RSI. We'll talk about the relative strength index next week. Thanks, everyone. Good luck trading this week. It looks like it's going to be choppy, so be careful out there. Never know what might happen in the next couple of weeks and before we get to the middle of December. So thanks, everyone, and good luck.